Good morning, welcome back to WellPod X. I'm Tony, and today is 6th of February 2025. Let's dive into today's X market update. Bitcoin is currently trading at around $98,000. With the crypto market moving sideways, Ethereum has gone up by 3%. In the broader stock market, Nvidia is up 5%, Google has dropped 7%, and Tesla is down 3.5%. Nvidia's surge is attributed to the strong earnings and positive outlook in the AI sector. Google's decline follows weaker than expected cloud service revenue, raising concerns about its growing trajectory. Tesla's dip is linked to the slower sales in Europe, prompting investor caution. Now we move on to morning deep dive. People are easily frustrated. They expect Bitcoin to hit $200,000 at the moment that spot ETF got approved. If you zoom out, what's happening right now is actually extremely bullish. Let's break it down. The thing to understand is that big moves in Bitcoin happen in phases. There's an accumulation phase where smart money and long-term investor buy Bitcoin while the price is moving sideways. This could be the phase that we're in right now. When it comes to expansion phase, where Bitcoin start to make higher high and media start to paying attention again, retail investors start piling in, and finally there's the euphoric blow off top, where Bitcoin goes absolutely parabolic. And suddenly, everyone, from your colleagues to your mom, is talking and asking about how to buy crypto. Right now, we're still in the relatively early stage. Institutional investors don't chase green candles. They accumulate when no one is paying attention. Since the ETF approval, we've seen a massive inflow into Bitcoin. BlackRock, Fidelity, and other major asset managers are adding exposures. But these moves take time to reflect in price. Big money don't operate on short-term time frame. They're thinking in years, not days, weeks, or months. Beyond institutional demand, macro conditions are also turning bullish. As we're in the interest rate cut cycle, more liquidity is going to be flowing into the market. Central banks around the world are moving toward a more dovish stance. And to look back, lower interest rate has been a major driver for Bitcoin's price appreciation. If the Federal Reserve pivot to quantitative easing later this year following Canada and other countries, we could see an explosion in risk asset with Bitcoin leading the charge. If we take a look at Bitcoin's historical bull cycle, there's a clear pattern after each halving event. In 2016 to 2017 cycles, Bitcoin halving was back in July 2016, but the real bull run didn't start until the early 2017, which is about 6 to 8 months later. By the end of that cycle, Bitcoin has surged from $650 to $20,000, a 3,000% increase. In 2020 to 2021 cycle, similar thing happened. The halving was in May 2020, and Bitcoin really didn't hit the first major breakout until late that year. From October 2020 to April 2021, Bitcoin went from $10,000 to $64,000 before hitting another wave later that year. In terms of psychology, every cycle people go through the same emotions. At the very bottom, they're fearful and convinced that Bitcoin is dead. Then, when it starts moving up, they doubt the rally and expected a crash. As it moves higher, they get frustrated that they didn't buy earlier. Finally, when Bitcoin is at all-time high, they FOMO in at the worst possible moment. I'm no different. I've done it myself back in 2017. But the thing is that we need to learn and evolve from it. So what I'm trying to say is, this cycle is no different. We're currently in the frustration phase. People are annoyed that Bitcoin isn't moving fast enough. They're hesitating. But if you look carefully, this is exactly when start money is buying. The market moves in a way that tricks the majority of people. If you wait for confirmation, you will be too late. These explosive moves doesn't come when everyone expects it. It comes when most people have given up. If there is one takeaway, it will be patience. Bitcoin is in accumulation phase, and it won't stay in this range forever. The longer it consolidates, the stronger the next move will be. And we all know when Bitcoin moves, it moves fast. If you're sitting on the sidelines waiting for the perfect entry, the chances are you'll probably miss it. Now let's take a look at today's top news. First news, the SEC has reassigned George Tenreyo, its leading litigator known for aggressive action against major crypto exchanges, to a role in its IT department. This could be a signal for a potential shift in SEC's approach to cryptocurrency regulations, possibly indicating a more collaborative stance toward the crypto industry. For Bitcoin and the broader crypto market, this could be a positive news, suggesting a future with fewer regulatory hurdles and a more favorable environment for innovation. The second news. Recent report claims that El Salvador has ceased recognizing Bitcoin as legal tender to secure a $1.4 billion loan from the IMF. However, it's extremely important to clarify that Bitcoin adoption in El Salvador is now optional, not abolished. President Nayib Bukele remains a staunch Bitcoin advocate, and the nation continues to invest in Bitcoin and promote related initiatives. It is certainly amusing to observe mainstream media's portrayal of this development as a failure, where in reality El Salvador is adapting its strategy to balance economic interest while maintaining its commitment to Bitcoin. Third news. The European Central Bank has expressed that because of the US President Donald Trump's support for dollar-pegged cryptocurrency aka stablecoin, it adds urgency to the EU's digital euro project. While the European Central Bank aims to accelerate the digital euro's development, it's crucial to recognize the potential risk associated with a central bank digital currency, aka CBDC. CBDCs could lead to increased government surveillance and control over individual financial activities, which contradict Bitcoin's foundational principle of decentralization and financial freedom. President Donald Trump's opposition to US CBDC aligned with the value of a free society, emphasizing the importance of privacy in the financial transaction. That's a wrap for today's episode. Please subscribe for daily updates. Stay invested, and I'll see you tomorrow.